Okay, now we're going to move to our next session, which is our first panel session. It is going to explore something that is a consistent issue in African aviation, but I can promise you it will not be the same as some of the other sessions that you would have seen based on this particular topic. And that is namely access to aircraft and suitable finance. Now, your moderator for this session is somebody who has a passion to see African aviation develop. And as they say, you can't make an omelette without breaking a few eggs. And he's somebody who's never short of an opinion, as those who listen to the monthly connectivity podcast that we do together can definitely attest to. Now, Sean Mendis has forgotten more about aviation than most of us will ever know. He always does a great job of moderating and asking the tough questions. So I hope that our panel is ready to be thrown onto the braai today. Now, I've asked Susie to play a particular song. This is my favorite song of Susie's, and I think it's very apt. It's called Africa Stand Up.
Good morning, everybody. Good. First things first, a couple of housekeeping things. Photographers, I need a new LinkedIn profile picture, so some good headshots, please. For those of you who were at my panel discussion in Nairobi last year at AviaDev, you'll note that the topic there was challenges that startup airlines in Africa have with acquiring financing in aircraft. And I think the logical progression of that is now the challenges that established airlines in Africa have with obtaining financing and aircraft. And we've got a wonderful list of people here who are going to be experts in their field who will be able to join us and answer some tough questions on the challenges, the solutions, and the general narrative around this. You might note over here that we have people here from Airbus and from Embraer. And when I asked John, what about Boeing? He said, well, the door is always open for them. Sorry. No, but in reality, we're going to be talking about the nuts and bolts of aviation, so perhaps that might be more suitable towards them. But anyway, we've maxed out all the jokes on Boeing right now. And with not much further ado, let me invite my panelists up one by one. To start with, we're going to have Joep Ellers. Joep is the Airbus head of marketing. And, I tend to go around my panelists and ask, tell me something about you that doesn't go out in your official profile. And what he confided in me is that Airbus's PR team never actually puts in the last line, which he always submits in his PR profile, is that he has 2 children and 3 goats. So, braai at his house.
Thanks, Sean. Thank you. Note the shoes. These are just comfortable shoes. Nothing special, but comfortable like our aircraft. Thank you.
Next up is Basil. I'm not going to attempt to pronounce his last name. Interestingly enough, he's got a very boring title of Head of Customer Finance EMEA, but he's actually one of the biggest av geeks in the room, which is a very strange thing for someone in customer finance. But on top of that, he is also a pilot with over 300 hours, and he says the most exciting thing about his job is to actually play with the metal that he's trying to get financed. So Basil will be here to av geek with us for the next 45 minutes or so. Come on in. Next up is going to be from Kenya Airways, Martin. Now, Martin, again, for those of you who don't know him, used to be a marathon runner in his younger days. For those of you who came to the morning run this morning, you may not believe that, considering that he finished second to last. But
Okay.
Martin's biggest challenge is actually his current marathon that he's running, which is turning around Kenya Airways into something profitable. But more critically to that, Martin is the only airline person who is consented to come on the podcast with John, myself, and Behramji and be grilled by us in real time about his airline and his routes and his plans. So Martin today is hopefully going to share a few more nuggets of wisdom with us for that.
I think I love pain.
And finally, last but not least, is the woman on our panel. But she's so much more than just a woman. And that is Thato from Investec. And when I was asking her, what's your background in aviation and everything, she said she didn't have any. She's a banker, but she stumbled into aviation. And like so many of us in the room, once you get bitten by that aviation bug, it just stays in your blood throughout. So she's now with Investec and doing aviation finance. And with that, tends to be financing the assets that a lot of these guys are making and buying. So it's a perfect addition to round out our team of 4 who are going to take my questions over the next few minutes. So come on in, Thato. Like many of the panels here, we've got a question. But the question here is slightly different, because the question is actually going to be what drives our discussion. So if we can get that panel up over here. We're going to be asking that question of the audience, but we're also going to be using that as the primary theme for what we're going to discuss here. The question is, what is the biggest challenge that African airlines face with their fleet plans? Is it, number 1, competitive financing? Number 2, airframe and supply chain delivery delays? Is Pratt & Whitney in the room? No, okay, good. Lower utility relative to global peers, so the inability to sweat your asset as much as others could, potentially. And number 4, the good old theme, regulatory issues. So please go ahead, start voting on that. But now I'm going to go to the experts here, and I'm going to start with the airline, since this is about what challenges do airlines face. Martin, of those 4, what do you think?
Yeah, thank you, and it's good to be here. It's good to be in Namibia. Thank you, John. Yeah, so actually, IATA for 2024 projects that African airlines will break even at, I think, 0.1 billion, with being driven by passengers, a margin of 9 cents per passenger. The biggest risk, the biggest threat to these numbers for most of us actualizing it, actually for us airlines, KQ specific, I would say the biggest one is airframe, supply chain delivery, and of course, close to that is competitive financing rates.
So when you're saying you've got challenges with airframes, and I know you and I have had this chat many, many times when Martin's like, I'm like, Martin, why haven't you opened this route? And he's like, if I had a plane, I would. Let's throw this at the OEMs, and let's start first with you in the corner. What are the OEMs experiencing in supply chain, and what is the impact downstream on your customers due to the inability to deliver these aircraft promptly?
It depends. In Africa, it's not just about delivering new aircraft. It's also about delivering pre-owned from elsewhere. So it really depends. In terms of the upcoming new deliveries that we've had some issues, but we're still on track. But also a lot of our time is spent just sourcing aircraft.
No, and I think there's a good point there, as you say, it's more than just having the aircraft ready to deliver, because it's something I was discussing with Basil yesterday, is sometimes an African airline may want to buy an aircraft, but as a customer, they haven't been able to finance that aircraft in time for the delivery flight to come in. What's your experience with that, Basil?
Yeah, my experience has been varied. So if we look at Africa, you have over 300 airlines that are operating right now. And they're kind of 3 segments. You have the very large airlines, so the top 6 that have over 50 aircraft. You've got 20 airlines that have more than 20 aircraft. And then you have this big, sizable market of 250 airlines that have less than 10 aircraft. And we've been delivering to some of those airlines. And so the experience that I have in financing or supporting the financing may be different to Joep's, because it's a lot of smaller airlines. And it's been a challenge because Many of these airlines do not have access to the same financing channels as some of the bigger airlines. Just yesterday, we had Overland Airways take the second E175 Plus, which is a big milestone for Embraer and for Overland. To give you some context, in the last 5 years, we've delivered 12 new aircraft into the African continent. So it's, as Joep said, a large part is pre-owned, and from time to time we do have new aircraft, but it's a challenge. So when we do have these smaller credits, these 250 airlines that have less than 10 aircraft, we typically see local banks, relationship banks step up and support. That's really helped. And if it's in a better jurisdiction, then ECAs are also able to support. But yeah, we do see delays in delivering, not just because of OEM supply chain issues, but also because of access to finance.
And I think that sets it up perfectly for Thato on behalf of the financiers to step in with their perspective on that.
Yeah, I think, we as, Investec Aviation Finance are definitely open for business. I think the perception often is that banks are reluctant to provide financing, but we're in the business of advancing loans and making money out of it. So when it becomes challenging is because of the factors that surround that transaction. So I think one of the answers you had there was regulatory issues. So if I think, for example, in a jurisdiction like Nigeria, where it's a really big economy, how are you relevant in financing in Africa if you're not doing it in Nigeria? But we've seen issues, for example, with insurances, where we can't get full reinsurance of the aircraft outside of the country because of NICOM regulation. So sometimes these regulations make it very difficult for us as financiers to be there, be on time for the delivery and provide the financing that is required. But it's not a reluctance from our side. We're here to do business and want to do business, but we obviously have to navigate the winds that we face in Africa.
I think that sums up Africa in a nutshell. It's never been a reluctance to do business in Africa. It's just been that sometimes the hurdles of doing business in Africa may not be insurmountable, but they definitely slow you down. But, just leading on from this and some of the discussion here, from a financier's perspective, so throw it back to you first, is there a particular preference from a financier's standpoint of financing new assets or previously owned assets, or what do you view as lesser risk and something that you're more open to doing?
So for us at Investec, where we've really found our niche has been not just looking at new aircraft and looking at pre-owned. I mean, that makes us very relevant to a market such as Africa. Yeah. I think at the end of the day, for us, it's about the value in the asset. And, aircraft have proven time and time again, from new, all the way, that there lies value in that asset. And that's what we assess. So it's not really a preference for new. We do know some financiers prefer new. And they're able to provide, interest rates that are competitive to match the newness of the asset and the risk that they take. But for us, our sweet spot has really been in the pre-owned space because it's relevant to our markets, and we see that those aircraft do retain their value.
No, and Basil, you were talking about how you see that pre-owned tends to be the growth sector in African aviation. Why do you think that is the case?
Well, the barriers to accessing the asset, getting a pre-owned asset in are a lot lower. We have a lot of airlines in the United States and in Europe who are phasing out ERJs and E1s. And so there is availability in the market, and availability is one of the things. And then it's also cheaper to access. So I think these are two reasons why we see pre-owned assets in the African skies.
So talking about E1s and pre-owned aircraft and so forth, Martin, you've got a fairly large fleet of E1s.
Yeah.
What is your general fleet plan around the E1s and, in general?
Actually, I think we are looking for markets out there because of the fit in Africa. But my concern here is Africa seems to be the place where we are getting a lot of pre-owned assets. But that does affect the profile of the companies in terms of their financial viability, in terms of the business plan. So, and even those pre-owned, we do pay a premium for them. So even when you talk about financing, we are not getting the most competitive rates even for those. And of course, the supply chain challenges still do impact the pre-owned assets when you need to maintain them. So maybe the question is, how do African airlines become more attractive to getting more competitive rates in terms of just aircraft financing?
Yeah, although I do have to push back here a bit, because if you take a pre-owned asset, your financing cost overheads, let's take, an E2, maybe you pay 350K in lease rentals a month, versus an E1 where maybe you pay 120K. So you have a lot more pressure. If you have new assets, you have a lot more pressure to really use those assets heavily, to utilize them 8, 9, 10 hours a day. And there's a lot of instability in the region and a lot of, unforeseen factors, black swan events. And so if you have a pre-owned asset with lower overhead financing costs, you're actually better hedged for, some of the turmoil. So I think that's just one of the considerations as well. We saw a lot of airlines that in the COVID times that had new assets and that were very exposed in that sense outside of Africa.
Now, I think that's, again, a very good point. And, I'm going to ask Joep this, and I'm going to now get into a bit of controversy. Airbus traditionally in Africa has sold to state-owned airlines. And consequently, when these new builds are going to these airlines, they tend to be backed by government guarantees and so forth. How do you think this positions, for new build deliveries into Africa from Airbus, whether that's wide-body A330neos to a East Central African country who doesn't quite know what to do with them, or whether that is A220s to a West African country who's rejected them now because of supply chain issues? How does that generally fit into, what Basil was saying about the need for getting good utility out of these aircraft?
Thank you for the jabs. First of all, I think what we're seeing is governments are less and less willing to support their airlines. I think we can.
Is South African Airways in the house here? Sorry.
So the assets come in. The assets come in. Actually, can we stop calling them assets? It makes it sound like a commodity. I mean, these are airplanes, and that's what our business is. It's connecting people. So we have a load of bankers and lawyers who probably make the most money out of our business. But so let's not forget that it's about the connectivity that we're offering. So Airbus will support the airline no matter what their structure, be it a state-owned airline that has the government guarantee, be it no guarantee. There are always going to be solutions. But also, it's not just about delivering the aircraft. It's helping find solutions to put those aircraft into service, open the routes that the airlines want to open, and optimize their operation as well.
Martin, you're the airline. Do the OEMs actually do that?
I think Africa has examples of many airlines that have been built by OEMs that are facing a lot of challenges. I believe the business plan and yesterday's discussion around the business plan that the airlines want to drive should be what the OEMs line up to. So from even my own experience with a different airline outside Africa, the support that those airlines do get in terms of the asset, in terms of you fitting into their business plan, seems to be a bit better than what most of us in Africa, I'm sure it's echoed around the room, get currently. So we do get, I think we have the second oldest A220 in Africa. Yeah. So we do get very old aircraft, and there is a challenge in maintenance. As much as they have a lower cost when you're bringing them in, the maintenance is quite high. And then we end up having assets that more or less litter the airfields. Yeah. Aeroplanes.
And I think that's a good point, because that's another one of the talking points I had over here, is the hidden costs of some of these, one call them assets, airplanes, these beautiful things that help us connect each other. But let's throw this at financing over here. Do you actually take a consideration in terms of what kind of maintenance support, does your potential client who's taking the financed aircraft have the ability to meet not just their rent payments, but their supplemental rent and their maintenance support and everything else? Is that something that you all are considering?
It's definitely something we consider, and I think, we've seen with, past airlines how important that was. I mean, a great example that comes to mind was Comair, that had a big reliance on SAA Technical, and how that impacted them and, their ability to get their aircraft on time, etc., and not having control of that process. So I think we've definitely learned from that experience that it's important to understand how much control the airline has of their maintenance, their ability to meet those maintenance reserve payments, etc., because that's what retains the value of the asset.
Interesting. So, Basil, I'm going to throw this at you since you're into customer finance. When you are putting forward financing packages or options to the customers, is that something that at the OEM level you're raising the flags to them, saying, guys, I know you can buy the plane, but do you actually know how to use it properly and maintain it properly? Is that something you're doing?
Yeah, I think we do it as part of the business plan, which we look at very carefully. So if it's a new delivery, then we'll always scrutinize the business plan and make sure that there is a strong business case there. If it's a pre-owned aircraft transition, we as an OEM don't even always know of the transition until it's happened. So it's a bit more difficult in that field. That said, we've got a great service and support team here in Africa as well. We've got Mohammed and also Ramon in the room from service and support. They're not hiding, they're out with the customer, but it is a challenge to support the customer because you have something on paper and it may be a decent assumption at the time, but with the supply chain issues that we have, we see that parts don't arrive at the right time, at the right place. And that's a big frustration for airlines, and I understand that, and I think Embraer and the other OEMs are trying to rectify that. So in the African context, the issue we have is not supplying new metal on time. It's really making sure that the pre-owned metal is flying and is flying according to the cost assumptions. If it's not flying, then it's not generating revenue, right? And so that's a big challenge, which I think you see as well.
Yeah, no, and I think you're absolutely right. And I'll speak from my own experience, running airlines in Africa, is that what an OEM or what the Western world might put forward as this is going to be a cost for anything, you need to put about a 30% Africa premium on it. And that premium is coming in the longer lead times to get your part, which means you have to carry more stock. It's coming in the logistical costs because the only people who really make money from airlines in Africa are DHL and FedEx because of all the AOG deliveries they are doing for us. And finally, you've got the customs and every bureaucrat who wants to put their rubber stamp on that airway bill before you can actually get that critical part to get your plane back in the air. So yeah, I agree with you. There is a 30% Africa premium on that. So when we're looking at that and when we're looking just coming through this, I think Martin mentioned that with the 100-seater or thereabouts sector, you are struggling to find places to fly them to, or you're looking for more places to fly them to. What is your view generally as to where the growth in African demand for pre-owned aircraft is going to come in? Is it going to come in that sub 100 or there about the E-Jet or A220 level, or is it going to be more in the A320s kind of thing, or is it going to be more in the 787 seat? Boeing, I gave you a shout out. 787 or A330, 350 kind of market.
Yeah, actually, that's a good story, or it's a good story for rebounding traffic within Africa. The fact that we are seeing more demand in terms of your mid-range, so the 320, the 737 NGs, or even the Maxes if you want to stretch it. Yeah, but but we are seeing a bigger challenge with the Embraers, which we do have. So that 96 to 100 market seems to be, most of them, first of all, this being Africa, there's a lot of luggage. You'll be surprised how much luggage. I'm even going to rent storehouses in Nairobi just to be able to transit baggage from intercontinental routes into Africa. So that's one of the biggest challenge, and that's a niche that's being filled also by those 320s. The Embraer, and I know the E2, and they're my friends, I think you can use them to start some routes, or you can use them for domestic, maybe, but that seems to be, the market seems to be outgrowing it, which is a good story for us airlines, that we're seeing much more demand.
Just on that note, yesterday I was complaining to Roger Foster that Airlink only offered me a 20-kilo baggage allowance coming to Windhoek, which had to carry all my suits, and Roger said I need to learn to pack lighter. So, good point there. But no, I think that's a good point over there, and I'm very curious to see what. Well, I'm going to throw this actually. Let's throw it at you first. Do you view Embraer as a competitor, or do you view them as sort of their marketing aircraft in a different segment? Your smallest aircraft competes with their largest aircraft, but otherwise there's no real product overlap. How do you view that?
Well, we have some fundamental differences. Okay, we've stopped calling them assets, but Basil's now calling them metal. But
this is the AvGeek. I warned people there's going to be an AvGeek component
Airbus, we
here.
have composite aircraft,
Oh.
so we won't call them metal. There are some fundamental differences. I'll get into them afterwards. But first of all, it's all about the demand. We saw Gert's study. It's about what we try and, the approach Airbus takes is, we take a bottom-up approach. We'll go and talk to an airline and say, and we'll think in size and range. It's the size module. Where do you want to go? It's not, hey, we've got some 320s, take those. It's no, what is your market? What would you like to go? And then the big question always when we compare ourselves with the regional jets is, do you want to take baggage or not? Because as you said, Martin, on the continent, I'm not from the continent, but I'm passionate about the continent. We don't travel, we move house.
Very good point. I mean, I remember when they said you carry everything but the kitchen sink, and I distinctly remember being at London Gatwick one morning when somebody had a kitchen sink to be checked in. So yes, it's not everything but the kitchen sink, it's everything and the kitchen sink. Basil, what's your rebuttal to that? And let's leave the composites part out, but rebuttal to the rest of it.
Oh, I'll go back to the composites part. Can you hear me? Yeah. Put on my boxing gloves. Yeah, so we actually on the E2 have slightly less composites than on the 220, but we were thinking about the customers when we designed the aircraft. So the leading edge slats, for example, are metallic because if you do have a bird strike, fixing a metal part is a lot quicker than a composite part. So there was a lot of thought into how we use, materials, but that aside, when it comes to competition between Airbus and Embraer, I don't really think in Africa we're competing head on head. Maybe in the upper segment with the E195 E2 and the 220-300, but that's one or two campaigns. That's a small part. Embraer has 300 aircraft in Africa. We have 50 turboprops, the Embraer 110, 120. We have ERJs, 30 to 50 seats, and I think we have 150 or so of those. That's not competing with Airbus. And even the E-jets, we've got 100 E-jets on the continent. Again, a 100-seat aircraft does not really compete with Airbus. So there are some campaigns in which the E2 and the 220 do go head-to-head in Africa, but it's very limited to those top 6 to 20 airlines in Africa. The other 270, 280 airlines, I don't think we generally compete.
Okay, I think that's a very diplomatic way of putting it. But I'm going to throw this now at Thato, because now we've discussed the merits of the smaller aircraft and the larger planes. From a financier's perspective, what is your preference?
Look, we don't run airlines. So I think for us, it's really about the value of the asset and the ability of that airline
we're back
to pay
to
back.
assets. No assets, no metals.
Oh, and the financier says assets. Okay, I'll call it metal. It's not for us to dictate. I think for us, we're very much, aircraft agnostic. It's really about, what's the value creation for the airline and their ability to pay it back, and can we give them the advance rate that works for them to continue with the financing.
Okay, and then to follow up on something which came out of Hilka's discussion yesterday, how important is the business plan of what, it's all well and good to say, all right, this is a good asset and, over there you're aircraft agnostic, but supposing someone comes tomorrow and says, hi, I'm a startup, or, I've currently got 2 turboprops, but now I want an Airbus 350 brand new ordered and financed to fly to the moon and back or something similar. Is that something that as a financier you're considering, or?
I think for us, the importance of a business plan is seeing it translate in the numbers. So oftentimes, the business plan will lay out, this is what we expect to achieve in 3 to 5 years, because we've targeted X, Y, and Z routes, and we're using, X, Y, and Z metal. And I think for us to be able to see that translation, from your business plan, and we see it reflecting in the numbers, it gives us the confidence that this works.
So basically you say track record is, I think Sanjeev had said on yesterday's panel that track record is something that his financiers valued more than necessarily what the plan is on paper.
100%, but I think the two work hand in hand, right? You have to plan to be able to generate that track record. So I think it's important for airlines to have a good and solid business plan, but I think over and above that, we need to see that there's the track record that it's working.
That leads perfectly into Martin, because he's an airline who's got an excellent business plan but a poor track record in recent years. Tell me, what is your experience with dealing with financiers in such a situation?
Just to set that record straight, yeah, we are 47 years old now. Yeah, so we do have a track record, and the bulk of those 47 years were quite profitable. We still did get the 30% markup whenever we go for aircraft. So in spite of a good track record, you still have to pay the price of operating in Africa. So definitely we do have a good business plan going forward. Last year was one of our best years. Our first operation profitability, $80 million in 7 years, the last 7 years. So we are working and we are showing results. But these challenges are there. You can't be blind to these challenges, and we work in spite of them. So now it's a seller's market, it's an OEM market, it's a lessor's market, and we have to find a way to scrape in whatever is left in terms of getting the aircraft, metal, etc., to be able to bring them in and grow that business plan. So you may have, we were told yesterday, you may have the best business plan until you get punched in the face, yeah? So we are receiving a lot of punches.
Good point. And now I'm going to fling this back at the OEMs, and I'm going to put a little twist on this. We've had the discussion of, unrealistic business plans and, African airlines with dreams bigger than their pockets. Do you believe that there is an ethical responsibility for an OEM to push back maybe on an airline who wants to buy something that you think is unrealistic, or is it just like, oh, well, they're offering us the money, we should take it and let them have the plane, and who cares if it flies? Let's throw that at Airbus, because I think you've got more customers who've been in that situation.
No, absolutely. I mean, it's in everybody's interest to match the airline's perceived need with the actual need, and to stop vanity projects. It's it's what we do is we'll work with the airline. Again, it comes back to defining the size, defining the range, where you want to go. Do you really need the latest and greatest brand shiny new aircraft? Is that going to create a business plan that works for you? Or do you need a second-hand aircraft, a pre-owned aircraft?
And what about Embraer?
Yeah, well, I think what you need to consider is the OEM also takes risk if it sells to an airline that won't be able to execute the business plan and take delivery. I mean, we do get pre-delivery payments, but if you have a shiny new aircraft in an African configuration with, staggered seating, and you then need to remarket and place that somewhere else, it's a challenge. So we scrutinize the business plans, and we don't just sell to anyone. And typically what we see airlines operate, the ERJs and then the E1s, and then maybe there's a conversation about new aircraft as well. And that's served us well overall, I would say. Yeah.
No, and I'll just throw in a little plug. If you weren't here yesterday to catch Geert from Airbus's presentation on the top unserved routes to and from Africa and within Africa, I think that's something you can download. There's a QR code somewhere floating around, but it's an excellent presentation. In fact, Geert will be joining John, myself, and Behramji on the podcast probably next month to unpack that some more. And not to be outdone, Basil's colleagues at Embraer, that's Theo and Renato are somewhere in the room. They've offered to do a similar study, but focusing on regional routes within Africa that best suit Embraer's products. So sometime during the third quarter, once again on the podcast, which is the AviaDev Insight podcast, available on your Spotify, Apple Podcasts, etc., we will have the Embraer team as well to be grilled by us, very similar to what we're doing over here. So, we've discussed now suitability of aircraft and everything, but now the challenges, and that challenge is utility. You can be, no matter how good a plane is, no matter how cheap you've gotten it, what a good value proposition that has, you still need to be able, the 24 hours in a day, you have to be able to use that plane close to half of that at a bare minimum. Martin, what are the challenges specific to Africa that basically don't allow you to use these planes as much as, a Ryanair sweating an asset for 15, 16 hours a day?
Yeah, so you end up coming with mitigation or how to resolve some of those challenges. I think the biggest one in Africa is just the infrastructure, airports that close quite early, especially for us in West Africa, because you need to cover that time. The mitigation here is you end up designing your hub structure or your bank structure in a way that you're able to service those West African destinations based on the times and of closure and opening of those airports. It is a challenge because for us, we can't afford to have low utilization. We cannot park the aircraft on ground in West Africa for 8 hours. We have to turn them around and fly them back simply because that utilization is what drives the bottom line. So you find interesting ways and you end up having a bank structure that's a bit, it's not so predictable where you have like a morning one and a evening one. You end up having something a bit more flat just because you have to service such routes. So yes, it's the infrastructure challenges that are big in Africa.
OEMs, is there anything that you're doing working with the other stakeholders like the airports or so forth to help address these challenges on behalf of your potential customer airlines? Or is your focus primarily on working just with the airlines and not the stakeholders? Airbus.
Before I answer, I'm a bit concerned because Basil just mentioned staggered seats in business class. I want to reassure my audience we don't have staggered seats on the 220. Sorry. Do we only talk to the airlines? No, of course not. We talk to airports. The study that Geert has produced was also done talking to different airports as well. And we'll also talk to airports operationally. If there's something where we can improve. An example was OR Tambo. There was an obstacle on the runway that was declared as an obstacle, which was hindering takeoff performance for...
That little hut that British Airways hit.
No. They didn't hit a hut, and that was going the other way. No, this was 3L, the ILS aerial, which is actually reducing the permissible takeoff weight of the 350 by about 5 tons. We worked with the airport and demonstrated that this obstacle, and with the local CAA, was actually frangible and therefore was excluded from the obstacle charts. That's the kind of level of detail. That wasn't just for us. That also helped Boeing. Sorry, yeah. I was going to mention being on a Dutch roll, but I think I'll pass over to somebody else now.
We do similar studies and collaborate with airports. We bring the E2 into Africa frequently, and recently we flew it into Kamembe Airport in Rwanda, and that required a lot of collaboration with the airport because No jet had ever landed at Kamembe Airport, and in this case, it only served us because Airbus can't, the 220 can't fly into Kamembe. But we do a lot of work with the airports, but also using the guidance of the airlines because they're ultimately the ones operating.
Investec, what kind of stuff do you get up to other than financing airframe / metal / assets / whatever we want to call them? Do you all do much with the airports and other stakeholders?
So I don't think we do as much as the OEMs do. I think for us, when we're looking at airports, it's more from a sort of an infrastructure financing view. There probably could be more that a financier could do to support an airline, but I must admit there's not much we get involved in. I think when it comes to the operations, I think we hold that phrase in the agreements, quiet enjoyment, quite seriously.
Now that's good. Going back to these staggered seats and so forth, and again, we're running out of time, but I want to throw some more questions on folks for business models. Where do you see the growth in the business models? Do you see it in the premium segment where people want to see staggered seats in business class, or do you see it at the lower end LCC segment where all economy, 189 seats on a A320 kind of options are going to be? Very quick, we got maybe 30 seconds each for this. You.
It depends on the market. There are not many markets in Africa where the low-cost carrier model works. But a prime example is South Africa, and there you would be wanting to compete with the highest seat capacity on the trunk routes to try and bring your unit costs down as low as possible. However, across the continent, regionally, there is very much a demand for a premium product, very much a business class demand. People travel and they're willing to pay to be in business class.
Yeah, I fully echo that. And one of the reasons we did develop the staggered seats in-house was to cater to the African and Middle East demands of a more premium travel experience. And there are markets where seat cost and high density cabin layouts do make sense, like South Africa. But in general, Africa as a whole is still very much a premium product market.
Yeah. I believe it also comes from the fact that most of Africa is not volume, it's actually value. It's value-based because you have a lot of niche markets, so you don't get as much demand, so you rather have that upfront cabin to be able to take care of your value. And that's how you end up meeting the bottom line, because if you try and push for many people flying, I think we have the numbers, we all know the numbers, you won't be able to get those from those markets, maybe driven by GDP and all that. So you have to more or less cater to the demand.
Investec, what's your view?
I think what's interesting to me is, aviation is one of the few industries that can actually create demand. So it would actually be interesting to see if in Africa, an airline could offer something affordable, would people actually choose and fly and then create that volume market? But it's yet to be seen.
I could not agree with you more. And, those who've heard me pontificate on this subject, I truly believe that the potential in Africa is virtually infinite if someone can crack the ability of delivering a safe, reliable, and affordable product at the right price point. Because, ground infrastructure in Africa is poor and distances are long. Aviation is perfectly poised if you can deliver it at the right price without too much regulatory barrier and so forth to get safety, reliability, and affordability in there. So, you summed up what I would have said, so that's why we've got a little bit extra time. Can we see what the final poll result is now? So after having listened to our people pontificate on these issues, where are we in terms of what people think? And people have slammed poor Investec. They say that the biggest challenge here is competitive financing rates. Investec, you have 20 seconds, rebut it.
I think this was a vote for who's the most attractive panel on the stage, and I think we've won.
I think that sums it up because, that with my tie, all good. Comments, quick. Joep, 10 seconds.
No, I'm going to talk about slats, or rather flaps. because you mentioned slats, so I'm going to mention flaps. Yeah, whoopie-doo, so what? But on the 321 XLR, we have new inboard flaps which give even better takeoff performance. So compared to the 321 Neo, with the 321 XLR, we can now fly 9 hours non-stop. Sorry, thank you.
Embraer, rebut this, please.
Yeah, I'm not going to give a marketing pitch. In terms of competitive financing, the issue is not Investec, APSA, or NetBank. These are the banks that are in Africa and support the African ecosystem. The problem is all the others. And you know, financiers, international financiers, have an opportunity cost in how they deploy their capital. And unfortunately, with the regulatory environment, Cape Town Convention, etc., there is a premium to financing in Africa.
Martin,
okay, quickly,
10 seconds.
Mine is on the cost of flying. I actually believe we can be cheaper. We just need to, and we have an example of Jumbojet that has been able to use sales law, supply creating its own demand. But we need that 30% impact to be reduced so that you can be cheaper but be profitable.
Thank you very much, everybody. That is our time. You've been a great audience. You've been a great panel.
Hello, we're Torvest Retail Services, your go-to crew for all things travel retail. We're trusted by airlines and rail operators to provide tailored best-in-class products, services and technology solutions that enhance their customers' experience to improve satisfaction and drive revenue. Our mission is to make the journey as memorable as the destination, personalising the customer experience at every step of the way, whether they're on board, in store or at home. As a division of the Torvest Group, we're big enough to deliver and small enough to care, calling on more than 5,500 team members stationed all around the globe. We're driven by a team of passionate people who genuinely care, with a work ethos and culture that strives for excellence in the pursuit of innovation and change, to enhance revenue, quality, cost effectiveness, efficiency and consistency for your business. All of this supplied at speed and underpinned by data-led research, customer feedback and joint decision-making. Earning respect and gaining trust through a human, honest, authentic partnership is the environment in which we thrive. We care. Torvest Retail Services, your faster, smarter partner.